very, very interesting over post 2007. As agents and financiers, everyone was very conscious about and sensitive about how much time your property was left on the market for. Because if you hadn't sold it within 3 months or 4 months, it would go stale, and then no one would want to buy it. But post 2007, and over the past, let's say, 5 years for sure, 6 years, which has been pretty slow, people don't really mind the property being available for a long time. They sort of semi-expect it. They want to go down the journey. They don't want to necessarily buy immediately unless they're being advised to, right? They expect that the property is going to be available for a while because there isn't as much demand. But if you get your pricing right at the beginning, people can step in and move quickly, although it's been a bit of a long distance race for the past few years. That may change because we're going to have different times now. What's really interesting is because we're all connected, social media, just everybody's got so many contacts now. As I speak to my agent friends and my clients and developers in the US, and they have a totally different mindset to situations like this, right? What happens is they decide to pull the plug.
So they're less emotional.
They're absolutely less emotional. What they do is they say, if we're going to bleed slowly, let's bleed deep now. Okay, let's cut our losses and let's step back into market and buy cheap.
Yeah, a bit like Warren Buffett. I mean, Warren Buffett a month ago bailed out of every airline. I think he had 10% plus holdings in airlines. He bailed out of everyone. He wasn't sitting there saying it's going to come back, it's going to come back. He just got out. And if it is going to come back, he wants to be in at a lower level.
Yeah, he wants to be in at a low level and he wants to be cash ready to do it. Look, I've been doing this for 22 years, okay? And every ultra high net worth or real savvy property person has loaded their bank up, getting ready to go and buy real estate at low levels. The problem in the US, you can do that because people cut their losses to move on to be the next best buyer in the marketplace. Here, we kick the can down the road. So when I've got US buyers that come here, and I've dealt with some very high profile US buyers, and what they do is they play the market as if they're negotiating in New York or Miami or LA. So if there's an asking price of 20 million or 30 million, they'll come in 20% less. And then they'll say, well, okay, counter our offer. And they're waiting for the counter, but the European owner says, no, I'm not countering, you're too far away.
And
it creates a sterile moment. They get offended. Exactly right. And so understanding how to work this process is vitally important, right? But it is very interesting how huge business is being done in the US, huge amount of business being done in the US, but it's so different when we're the closest people to them. A quick question. If you were going to bank on one horse to perform relatively well, right? And it was either Hong Kong, New York, or London. But how actually, no, give us the point 1, 2, and 3. Who crosses the line first?
Well, I think 100% not Hong Kong, because Hong Kong's ridiculously expensive, the bubble market, and secondly, the political possibilities are huge there of a real crisis. So definitely not Hong Kong. Great market for Chinese money, but I wouldn't have Hong Kong at the top of my list, not in the short to medium term. New York is too reliant on Wall Street, in my opinion. New York doesn't have the green space of London. London is 23 different villages. You have so much more choice in London. In New York, it's either a high-rise condo or the super prime, or maybe a townhouse, which in my opinion often are a bit dark and gloomy for London buyers, not much outside space. So I would always go for London. It's the market. I know the Hong Kong market, I know the New York market, but I see London having more flexibility, more diverse product, and less political risk.
And inventory. We have less inventory.
Yes.
We have virtually no inventory here.
Yes, absolutely. I don't know. What do you think, Danny?
I'm quite bullish over Miami.
Yeah, Miami's matured a lot. If you look at the origins of Miami real estate, it came from a very dark place. It's matured a lot over the years and become a lot more mainstream. I get that.
So I tell you what, I tell you what I think. I tell you why I think Miami. I think there are bigger factors at play. One of them, there's a tax advantage of being in Florida.
Yeah.
Two
Over
is
New
that,
York.
yeah, over New York. Two is that in terms of time where we are in the world, LA's a little bit too far away, albeit the weather's very good. Miami's weather's probably better, and it's a bit closer to everything else throughout Europe and Asia to a certain extent if you're going that way around the world. If you look at what we are doing now, we're building relationships digitally and we're transacting digitally. I think the necessity of being in a very dense community is not a necessity anymore. To do business and communicate, and therefore you can choose the neighborhood that you want to be in. Now, that's an hour and a half private jet flight. Okay, so for the super prime sector, I can see people, and I posted about it yesterday on my Instagram account. You're seeing more people coming to Miami than LA.
Exactly. Take it one step on from that. I think Palm Beach is even a greater attraction because it has more old style wealth. It has more older people who tend to have the wealth. It has so many golf courses, which people like, country clubs on the sea, as is Miami, and probably doesn't have the big city. Well, it doesn't have the big city sitting behind it that Miami does. Has access to boats, which obviously Miami does, which is a big lifestyle thing. The fact that you can moor in some properties a boat at the end of your garden is a huge plus point. So I think both of those cities. I think Miami. Obviously at the moment restaurants aren't the biggest draw, but Miami probably has the best restaurants in the world. Every single brand is represented in Miami, and it has every hotel chain and every condo attached with the hotel facilities attached. Obviously, it's been a founder, one of the main leaders with Ritz-Carlton, W Hotel, Mandarin, all these different hotel brands servicing apartments, which gives you that lifestyle. So where would you go after Miami? What do you think of places like Lisbon?
It's funny you say that because I'm going to a place called Comporta, which is just south of Lisbon. And I'm thinking about potentially buying something down there.
Take a 20-year view. Comporta will be massive. A lot of the Ibiza crowd are going to Comporta. It's rustic. It's got beautiful wild beaches, Caribbean style sea, although it's not warm. And huge development opportunities there. The key risk with Comporta is they get it wrong. And they start building the wrong product, not eco-friendly, and it becomes another Benidorm. I don't see that.
Well, the other thing is can't see that happening because it's about the profile of the people who are going there. But the other thing is that if you've got sweet blood, and wait a second, mosquitoes.
Yeah.
I think there's an issue with mosquitoes there, so I'm going to go down there and put myself in a position of harm to see if that's actually the case.
Well, it is swampland.
They love me.
A lot of it. There's a lot of internal water, which is swampland. But you can deal with things like that.